Coco, your trusted local real estate agent. Before you start, if you want clear data-based Canadian real estate analysis, make sure you subscribe to my channel, hit like, and turn on the bell. I post every week and I reply to every comment. Today, I'd like to share more real estate insights with you.
So lately, we've been seeing a lot of headlines saying things like real estate is too weak, investing isn't worth it anymore. Stocks are hotter now. To be honest, I also invested a little bit in the stock market. And yes, it has been doing very well. With stocks, you have zero control. The stock market is driven by global sentiment, global policies, global capital flows. We can't influence any of that. And you can't meaningfully use leverage with stocks. But real estate is different. With property, you actually have a certain level of control. You can decide how to structure your mortgage, what financing strategy fits you the best, how to leverage your capital to grow your net worth. That's the true advantage of real estate. You can use leverage responsibly to scale your assets. This is why real estate remains one of the most powerful wealth building tools, even when the headlines say otherwise.
As of October 29th, the Bank of Canada has cut rates for the fourth time this year, down another 0.25%. And the mortgage rates officially returned to around 4%. And this one number, 4%, is a turning point. Why? Because at 4%, the cost of owning a condo in Toronto is now very close to the cost of renting the same unit. Now let's take a very real example. A buyer just purchased a 500,000 condo in Toronto for personal use. Market rent for this unit about around 2,200, 2,400 per month. Now let's compare. If you put 20% down, mortgage around 4%, monthly mortgage payment is about 1,902, plus property tax, maybe around 218, and condo fee around 524, and the total cost is going to be 2,644 per month. So holding this property cost only 244 months, more than renting. But remember, part of the mortgage payment is principal, which is forced savings. So if you remove the principal portion, the buyer's real living cost is around 2,054 per month, which is lower than renting. This is exactly why many first-time buyers are finally coming back. At 4%, rent versus buy flips.
So for the last 2 years, investors were in defense mode because rates were above 6%, and holding multiple properties was very, very expensive. I had a few, so I know exactly. Now, with mortgage rates back near 4%, this is the point. Real estate investing becomes favorable again, I think, even if prices don't move. For example, so if you have 500,000 condo in downtown Toronto and the per month rent is 2,400, with 20% down, after all costs, the return on your capital is about 4% pre-tax. With 30% down, it's also about 4% pre-tax. So where is the difference? Tax efficiency. So with 20% down, the actual tax payable is lower. So the rent after tax return is better. And that negative cash flow people really hate. But it's not a loss. It's literally your down payment paid in installments. Negative cash flow is not losing money. It is converting cash into your equity. History proves this pattern. So think about 2003 Hong Kong and the 1980s Canada. Every major real estate downturn ended when mortgage rates dropped back to the 4 to 5% range because the cost of real estate demand is simple. When the cost of owning approaches the cost of renting, capital flows back into buying. So lower rates equal lower holding costs. Lower holding costs equal buyer confidence returns. We are now at that point again. Real estate is the mother of the economy. A low-rate environment will gradually pull buyers back in, especially first-time buyers who realize renting is no longer cheaper, and those investors who survived the high-rate period. So congratulations, you defined it successfully. 4% is not just a number. It is a turning point where the market shifts from cold to warm. Toronto's real estate winter break, I think, is ending. Canada is not a country with population decline. Canada is an immigration country. And Toronto is one of the major global cities where immigrants continue to pour in. As long as immigration stays strong, housing demand will always remain strong. You can choose not to buy stocks, but people will always need a place to live. Do you think so? That's why I actually hope everyone can rebuild confidence in real estate investing. If you found this helpful, please make sure to like this video, subscribe to my YouTube channel, and turn on notifications so you won't miss any of my real estate insights. See you in the next video.